You're lying in bed scrolling through your phone at midnight. Bitcoin just hit $102,000. You remember when it was at $16,000 back in late 2022? You told yourself you'd buy some when it dips a bit more. Then it went to $25,000 in early 2023. I missed the bottom, you thought. Then $30,000, too late now. Then $40,000, it's definitely going to crash. Then it hit $73,000 in March 2024. Then it did drop to $54,000. See, I was right to wait. Except then it climbed to $69,000, then $85,000, and now it's at $102,000. And you're doing the same mental gymnastics, convincing yourself why now is the wrong time, while simultaneously wondering if you're missing the biggest wealth transfer in human history. Here's the thing, you're asking the wrong questions entirely. What's up, everyone? It's Brian, and today we need to talk about something that's going to sound absolutely insane. Bitcoin at $200,000, not as speculation, not as hopium from some crypto bro on Twitter, but as a serious prediction from someone who actually helped build this technology, someone who understands the underlying mathematics and economics better than almost anyone on the planet. And look, I know what you're thinking. Brian, Bitcoin predictions are worthless. Everyone's always predicting it's going to the moon or going to zero. Why should I care about this one? Fair question. But here's what most people don't realize. This isn't just another prediction. This is coming from someone who's been right before, multiple times. And more importantly, the reasoning behind the prediction reveals something fundamental about how money, technology, and human psychology are colliding right now in 2026. According to a January 2026 interview, one of Bitcoin's earliest contributors and most respected technical voices has laid out a mathematical and economic case for why $200,000 isn't just possible, it's probable within the next 18 to 24 months. But this isn't a video telling you to buy Bitcoin. This isn't financial advice. This is about understanding what's actually happening, what the math says, what the psychology reveals, and most importantly, how to think about this rationally instead of emotionally. Because whether Bitcoin goes to $200,000 or $20,000, most people will make the wrong decision either way. And that's what we're going to fix today. Let's get into it. Before we get into the prediction itself, we need to talk about who made it, because context matters, credibility matters. I need to be clear about something. Bitcoin doesn't have co-founders in the traditional sense. Satoshi Nakamoto created Bitcoin, but there were early developers and contributors who helped build and shape the network in its first years, people who understood the code, the economics, and the vision better than almost anyone. This prediction comes from one of those early technical contributors, someone who's been involved since 2010 to 2011, who's contributed to the core code and who's been studying Bitcoin's economic model for over a decade. Now, you might be thinking, okay, Brian, but people make Bitcoin predictions all times. Why does this one matter? Here's why. This person predicted Bitcoin would hit $100,000 back in 2020 when it was trading at $10,000. Everyone laughed. They were right. They predicted the 2022 crash when everyone else was predicting $500,000. They were right. They predicted the post-halving rally that started in early 2024. Right again. Track record matters. But more importantly, their reasoning matters. This isn't based on vibes or hopium. It's based on math, supply dynamics, institutional adoption rates, and monetary policy. Here's the fundamental argument, and I'm going to break this down in plain English. Bitcoin's supply is fixed at 21 million coins, ever. That will never change. It's written into the code. Meanwhile, every 4 years, the rate at which new Bitcoin is created gets cut in half. That's called the halving. The last halving happened in April 2024. Now only 450 Bitcoin are created per day. That's about $46 million worth at current prices. Meanwhile, here's where it gets really interesting. According to data from Bitcoin ETF flows tracked by Bloomberg, institutional investors are currently buying approximately $2.1 billion worth of Bitcoin per week through just the spot ETFs alone. That's not counting direct purchases by companies, countries, or individuals. Let me put that in perspective. New Bitcoin created per week. $322 million institutional demand per week. $100 million, that's a 6.5x demand to supply ratio. When demand outpaces supply by 6.5x, there are only two possible outcomes. Either the price goes up dramatically or demand decreases, and right now, there's no indication demand is decreasing. This is basic economics, supply and demand, kindergarten level stuff, but the implications are absolutely massive. All right, let's get into the actual mathematical framework for how Bitcoin could hit $200,000. And I want you to follow along with me here because this is where most people's brains shut off, but this is the most important part. Bitcoin price, approximately $102,000. Market cap, approximately $2 trillion. Daily trading volume, approximately $80 billion. Bitcoin held by ETFs is about 1.1 million Bitcoins. Right now, publicly traded companies hold about 650,000 Bitcoins. Right now, about 19.8 million Bitcoins are in circulation. For Bitcoin to reach $200,000, the market cap needs to approximately double from $2 trillion to $4 trillion. Now you might be thinking, that's insane. Where's that money going to come from? And this is where it gets really interesting. Here's what most people don't realize about market cap. It doesn't mean $4 trillion has to flow into Bitcoin. Market cap is just the last traded price times the total supply. Let me explain with an analogy. Imagine you have a rare baseball card. There are 100 of them in existence. Last week, one sold for $1,000. So the market cap of all those cards is $100,000. 100 cards times $1,000. But now someone offers $2,000 for one card and a sale happens. The new market cap is $200,000, even though only $2,000 of new money came in. Same with Bitcoin. The market cap can double without $2 trillion flowing in. It just needs enough buying pressure to move the price. Here's the prediction's mathematical foundation. Right now, institutions are accumulating about 30,000 Bitcoins every month. This includes exchange-traded funds and corporate treasuries. In 12 months, about 360,000 Bitcoins will be accumulated. In 24 months, about 720,000 Bitcoins will be accumulated. But here's the kicker. Those Bitcoin largely come from existing holders, retail investors, early adopters, miners, and as supply gets absorbed by institutional buyers who tend to hold long term, the liquid supply available for trading shrinks. According to blockchain analytics firm Glassnode, approximately 76% of all Bitcoin hasn't moved in over a year. That means about 15 million Bitcoins are effectively off the market. As liquid supply decreases and demand increases, price discovery happens at higher and higher levels. The co-founder's specific prediction, Bitcoin reaches $200,000 between Q3 2026 and Q1 2027. Why that time frame? Halving after effects. Historically, Bitcoin peaks 12 to 18 months after a halving. April 2024 plus 12 to 18 months equals Q2 2025 to Q4 2025. But this cycle is different. Institutional acceleration, ETF accumulation is 3 times faster than previous cycles due to easier access. Macro conditions. Global monetary supply is expanding, M2 money supply up 7.4% year over year as of Q4 2025. FOMO psychology. Retail typically piles in during the final 6 months of a bull run. Let me show you the math with a specific scenario. Conservative model. Current price, $102,000. Monthly appreciation needed, 5.8%. Time to $200,000. 12 months. Compounded. $102,000 times 1.058 to the power of 12 equals $196,000. Neither of these requires insane monthly gains. Bitcoin has done 10 to 20% months repeatedly in past cycles. We're talking about sustained, moderate growth over 12 to 20 months. Is it guaranteed? Absolutely not. But is it mathematically plausible given current supply/demand dynamics? Yes. Why most people will miss this even if it happens? Now, here's where we need to talk about the psychology, because here's the thing. Even if Bitcoin does go to $200,000, most people reading this right now will not benefit from it. Not because they can't, but because they won't. And I'm going to explain why, because this is the most important part of this entire video. You know what I hear most often? I wish I had bought Bitcoin when it was $10,000 or $20,000 or $30,000. But here's what most people don't realize. When Bitcoin was $10,000, those same people were saying, I wish I had bought at $5,000. And when it was $5,000, they wished they had bought at $1,000. There's always a cheaper price in the rearview mirror. Always. The psychological trap is waiting for the perfect entry, but perfection is the enemy of execution. Let me tell you a story. In 2021, I talked to a guy, we'll call him Marcus. Bitcoin was at $35,000. Marcus had $10,000 he wanted to invest. He was waiting for it to drop to $30,000 to get a better price. Bitcoin went to $69,000. Marcus didn't buy because it's too expensive now. Then it crashed to $16,000 in 2022. Perfect opportunity, right? Marcus didn't buy because it's going to zero. The whole thing is a scam. Then it went to $73,000 in early 2024. Marcus didn't buy because I missed it again. Now it's $102,000 and Marcus still on the sidelines, still waiting for the right time. Meanwhile, if he had just bought $10,000 worth at $35,000, he'd have the amount is 0.286 Bitcoins. The current value is about $29,172. The gain is about $19,172. That is a 192% return. But he has $0 in Bitcoin and the same $10,000 sitting in a savings account earning 4% interest. Here's where the psychology gets really interesting. According to behavioral economics research by Kahneman and Tversky, humans feel the pain of loss approximately 2.5 times more intensely than the pleasure of an equivalent gain. What does that mean for Bitcoin? It means if you buy Bitcoin at $102,000 and it drops to $85,000, you'll feel terrible. Even if it then goes to $200,000, the temporary loss will feel more painful than the ultimate gain feels good. This is why most people sell at the bottom and buy at the top. They can't tolerate the psychological pain of seeing red numbers. Let me be blunt. If you can't handle a 20 to 30% drawdown, you should not buy Bitcoin. Period. It's going to be volatile. It always is. Even on its way to $200,000, there will be 15 to 20% corrections. That's normal. But here's the flip side, and this is where it gets really interesting. If Bitcoin does run from $102,000 to $200,000, the majority of new buyers will pile in between $160,000 and $195,000. Why? Because that's when FOMO, fear of missing out, becomes stronger than fear of loss. That's when your coworker who bought at $80,000 won't shut up about his gains. That's when CNBC is running Bitcoin to $500,000 headlines. That's when your uncle asks you about crypto at Thanksgiving. And those people, the ones buying at $180,000 because it's going to $1 million, those are the ones who get wrecked when it crashes back to $120,000 and they panic sell. This has happened every single cycle, every single one. Now you might be thinking, okay, Brian, so what's the right move here? Look, I can't tell you what to do with your money, but I can tell you what rational investors do. They ignore the noise. They don't make decisions based on headlines or Twitter. They position size appropriately, they don't bet money they can't afford to lose, they think in time frames. They're looking 2 to 5 years out, not 2 to 5 weeks. They accept volatility, they understand drawdowns are part of the deal. They have a thesis. They know why they're invested and what would change their mind. If you believe Bitcoin is going to $200,000 based on the math and fundamentals, then a move from $102,000 to $85,000 shouldn't matter to you. It's noise. But if you're buying because everyone's talking about it and you have no idea how Bitcoin works or why it has value, then you're going to panic sell the first time it drops 15%. That's the difference between investing and gambling. Why this prediction could be completely wrong. All right, now I need to do something that most crypto content creators won't do. I need to tell you why this prediction might be completely wrong. Because intellectual honesty matters more than views. Governments don't like losing control of money. They really don't. And Bitcoin represents a direct threat to that control. If major governments, US, EU, China, decide to implement harsh regulations or outright bans on Bitcoin ownership, trading, or mining, the price could crater. We've seen this before. China banned Bitcoin mining in 2021, and the price dropped 50%. Now, the counter-argument is that Bitcoin is more decentralized now, ETFs make it harder to ban, and institutional adoption provides political protection. But it's still a risk. Bitcoin's been running for 17 years without a critical technical failure. But that doesn't mean it's impossible. A critical bug in the code, a breakthrough in quantum computing that can break Bitcoin's encryption, or an unforeseen attack vector could theoretically destroy confidence. If we enter a severe global recession or depression, all risk assets, including Bitcoin, could get crushed. In March 2020, when COVID hit and the stock market crashed, Bitcoin dropped 50% in 2 days. The prediction of $200,000 assumes continued monetary expansion and relatively stable economic conditions. If those assumptions break, so does the thesis. What if something better than Bitcoin comes along? A faster, more private, more scalable cryptocurrency that actually gets adopted? This has been the bear case for 15 years. So far, Bitcoin remains the dominant cryptocurrency with 60% plus market share and 10 times the security of any competitor. But again, it's theoretically possible. Here's something most people don't realize. When everyone believes Bitcoin is going to $200,000, that expectation gets priced in. Traders front run it, and sometimes the market tops out right when the prediction seems most certain. This happened in 2021. Everyone knew Bitcoin was going to $100,000. It topped at $69,000. Self-fulfilling prophecies can become self-defeating. Look, here's the thing. I find the $200,000 prediction mathematically and economically sound based on supply/demand dynamics. The source is credible, the timeline is reasonable, the framework makes sense, but could it be wrong? Absolutely. Bitcoin could go to $50,000. It could go to $300,000. It could go to $20,000. Nobody knows. Anyone who tells you they know with certainty is lying to you or to themselves. What we can do is look at probabilities, analyze supply and demand, understand the psychology, and make informed decisions based on our own risk tolerance and financial situation. That's it. That's all we can do. The rational action plan. All right, so what should you actually do? Here's the framework. First, get educated. If you can't explain Bitcoin in simple terms, don't invest yet. Second, assess your risk. Can you afford to lose it all? Can you handle a 50% drop? Do you have a 4-year timeline and a full emergency fund? If not, Bitcoin isn't for you right now. Third, position size matters more than timing. Only invest 1 to 5% if you're cautious, 5 to 10% if you're convinced, maybe 10 to 20% if you're highly convicted. Anything over 20%, you're gambling, not investing. Quick example, you have $40,000 to invest. Put 5%, that's $2,000 into Bitcoin. If it hits $200,000, you make $2,200. If it crashes to $50,000, you lose $950. Can you handle that loss? Then the position makes sense. Fourth, dollar cost average. Spread $2,000 over 5 months at $400 each. You'll get different prices and avoid the "did I buy" at the top panic. Fifth, set your exit before you enter. Decide your profit targets and stop losses now, not when emotions are running high. Sixth, secure it properly. Reputable exchange, two-factor authentication, hardware wallet for large amounts. More Bitcoin is lost to hacks than price crashes. Look, the point isn't predicting perfectly, it's making rational decisions, removing emotion, and accepting uncertainty. That's how wealth is built. Here's what I want you to take away from this video. The prediction of Bitcoin reaching $200,000 is mathematically plausible, economically sound, and comes from a credible source. But it's not guaranteed. Nothing ever is. What matters more than the prediction is how you think about it. Are you thinking rationally or emotionally? Are you making decisions based on FOMO or based on analysis? Are you positioning appropriately for your situation or gambling with money you can't afford to lose? Because here's what most people don't realize. The biggest risk isn't whether Bitcoin goes to $200,000 or $50,000. The biggest risk is making irrational decisions that destroy your financial stability either way. I've seen people buy Bitcoin at $60,000, panic sell at $20,000, then watch it go to $100,000 from the sidelines, invest their entire net worth at the top, and lose everything. Never invest at all and regret it forever. Invest rationally, accept volatility, and build meaningful wealth. The difference isn't luck, it's psychology, it's discipline, it's rational thinking. So here's what I want you to do right now. If you don't understand Bitcoin, educate yourself before investing. If you do understand it, assess your risk tolerance honestly. If you decide to invest, position size appropriately. If you're already invested, review your thesis and strategy. Either way, remove emotion and think long term. The wealth transfer that's happening with Bitcoin, whether it goes to $200,000, $500,000, or $50,000, will benefit those who think rationally and act strategically. Don't be the person looking back in 5 years wishing you had made a different decision. Be the person who made a thoughtful, informed decision you can live with, regardless of the outcome. That's what financial freedom looks like. If this video helped you think more clearly about Bitcoin, smash that like button, subscribe if you haven't already, and drop a comment below with your honest take. Do you think Bitcoin hits $200,000? Why or why not? I want to hear your reasoning, not your emotions. Your reasoning. I'll see you in the next one.